This just in, Zillow can't actually predict the future. Who knew? This should come as a surprise to absolutely no one. Today, they actually shut down the iBuying program permanently. If you follow this channel, you know 2 weeks ago we did a video. We were talking about how Zillow Offers, the iBuying program was, they were pressing the quote unquote pause button to reevaluate and reassess. Well, today is the day. It's less than 2 weeks later, and they made a decision to just cancel it altogether. And there's many reasons for that, but I've got an article pulled up from the Wall Street Journal that was from earlier this afternoon, and provides some more details. So let's get into it. But before we do that, if you are new to the channel, welcome. My name is Brian. I'm a realtor here in the Boston market with Lamakia Realty. And on this channel, we cover all things real estate. So with that in mind, let's get into it. Okay, again, this is from the Wall Street Journal, and it says Zillow quits the home flipping business, cites inability to forecast prices. Termination of iBuying comes after company said it was halting new home purchases for the rest of 2021. Real estate firm Zillow is exiting from the home flipping business, saying Tuesday that its algorithmic model to buy and sell homes rapidly doesn't work as planned. Again, I mentioned this in the video a couple of weeks ago. The market in which they're operating in is highly speculative. So, of course, it's not going to work, because at the first sign of the market starting to level off or go down a little bit, you're going to be in a world of hurt because you've purchased all these homes for way over value. Let's keep reading. The firm's termination of its tech-enabled home flipping business, known as, quote, iBuying, follows Zillow's October 18th announcement that it was halting all new home purchases for the rest of the year. At the time, Zillow pointed to labor and supply shortages for its inability to renovate and flip houses fast enough. Again, in that video, I'll leave a link somewhere in this video. I don't know if it's this corner or that corner. We talked about this particular reason that they gave, the shortages of labor and supply, and I called absolute BS on this. That was ridiculous. Everyone's struggling with that. All of the iBuying programs are struggling with that. What makes you so special, Zillow? So I knew that was just a cover for the fact that they purchased a bunch of homes for way too much money. Let's keep going. But Chief Executive Rich Barton on Tuesday said Zillow had failed to accurately predict the pace of home price appreciation, marking an end to a venture the company once said would generate $20 billion a year. We've determined the unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow Offers would result in too much earnings and balance sheet volatility. Mr. Barton said Zillow, which will release earnings later on Tuesday, said it would report that its home flipping business, Zillow Offers, lost $381 million last quarter, as measured by earnings before interest, taxes, depreciation, and amortization. That resulted in a combined EBITDA loss of $169 million across all of Zillow. The company said it also plans to cut 25% of its workforce. And that, folks, is the tragedy here. 25% of the workforce. I knew that they were putting resources against this project of iBuying, but I had no idea they had put that many resources. Now, Zillow has about 5,000 or 6,000 employees, so it's roughly, I don't know, somewhere in the neighborhood of 1,000, 1,500 folks that are now going to be looking for a new job, which is tough. It's right before Christmas. This is just a really difficult time to be looking for work, especially at the wages that I'm sure Zillow is paying. Now, a lot of you don't know my history, but I have worked at a lot of startups in the past, and I get into it knowing that some are going to hopefully work out and others probably not. But that's the risk that you take when you join a startup. With Zillow, this is an established business, publicly traded company. So this is really reckless from my perspective, from the folks at the top, to put the business in jeopardy like this, where they then have to go out and cut 25% of the workforce. So this is corporate America at its worst, honestly, when I dive deeper into this. But anyways, let's keep going. Zillow's share price was down about 12% in late trading Tuesday, but before it announced the decision to end home flipping. Obviously, that's going to have an even bigger impact on that. The move represents a big hit to Zillow's top line. Home flipping was the company's largest source of revenue, but it has never turned a profit. Zillow has an inventory of more than 9,800 homes across the U.S. that is currently shopping to investors. There are another 8,200 homes in contract it has agreed to buy. The company expects to lose somewhere between 5 and 7% of these homes, the company said. All right, I'm not going to continue because there's a couple of other things that this talks about, but you get the gist. Zillow is in a world of hurt. They overpaid for a lot of homes, and they're just, what's fascinating to me is they didn't really think it through. They were like, oh, let's just go out and buy these homes. It'll be easy. We could just hire a bunch of people, come in, we'll put on some new siding, and we'll repair the roof. We'll maybe put in some new cabinets, new kitchen, and it'll be easy. You know, I see it on the TV. I see it on the home improvement shows all the time, and they spend like $10,000, $15,000 and the place looks great. Well, the reality is there's nobody to do the work. If you can't get somebody to do the work, they're going to charge a fortune, and the materials in order to do that work are also going to cost a fortune. So it's just not profitable. The folks who are fixing and flipping homes right now are typically people who have been doing this for quite some time. They have established networks, and they know what they're doing in the local market in particular. And they're also not overpaying for homes, which Zillow clearly was. So what does this all mean? Who knows? Have they predicted that this was the top of the market, or people are saying now, like, Zillow, if Zillow's out, then they are calling the top of the market and things are going to go downhill from here. I still don't see it. Again, I talked about this a couple of weeks ago, where there is definitely a softening on the market. Is it seasonality? Is it something else? Nobody knows for sure. But I know, again, I'm in the Boston market, that it is, I do have clients that are having accepted offers now, as opposed to in the past. In the spring in particular, it was just virtually impossible to get an accepted offer because it was just so hot and so competitive. But things are starting to look a little better. Now, the bigger issue is still inventory. There just isn't the same level of inventory that there was, say, from 2019, 2018, 2017. We're about half, at least in my market, we're about half of the inventory compared to where we were in those years. So that's going to be a challenge. You can't have half the inventory and expect home prices not to at least remain the same, if not continue to appreciate. So what do you think? What kind of impact is this going to have on the market? Again, I'm in Boston, and Zillow really isn't operating here in this market, but I know they are in a lot of other markets, especially in the Sun Belt, anywhere from California all the way out to the Carolinas and south into Florida. So if you are experiencing that in your market, I'd love to hear from you in the comments down below. If you did enjoy this video, make sure that you smash that like button and also click the subscribe button to be notified of future videos. Thanks for watching. Take care.